Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. I have a newsroom here in my Discord where I copy from Financial Juice. You know, we go on their website on Financial Juice. I just copy and paste so my members don't have to go out of their way to go on the website, but got it from Financial Juice. We came in, we got the data 8:30 a.m. this morning. PPI came in at 4.6%. Okay. So lower than expected. Inflation came in lower than expected for the producers. You know, and I was hoping the SPY gave us a decision day where we get a very nice decisive move. Instead, you know, we had a pretty chopped day here. And then towards the end of the day, we got, you know, a decent pop after 2 o'clock. We got some news around 2:27 Eastern about Switzerland holding talks on option to stabilize the credit squeeze. We got a lot of, you know, a lot of bad news coming about the banks and stuff like that. But yeah, pretty much choppy day. Got a nice little pop towards the end of the day. Very nice if you're trading level to level unbiasedly or if you're scalping. But as far as swing trading goes, this is getting a little difficult here, and what I'm going to do in today is identify the critical levels that I'm watching and give you guys my plan on how to trade it, how I would trade it, and maybe some swing trading ideas. All right, so let's prepare. Okay, so this is the 15-minute chart. I like to start off my video explaining how I traded today, and the point of it is to teach you guys my concepts on how I trade, my trading strategy. Okay, like I always tell you guys, I identify support resistant levels using the daily chart and the weekly chart. I long breakouts of resistance, short breakdowns of support. And today, the first setup of the day was a breakout of 387. I had a level at 387. Okay, if we go to the daily chart, 387 is this white trend line here. That's the yearly trend line from January 2022 high, from all-time high. You guys can see here, I try to buy calls, but it did not work out. All right, so I cut loss when I saw the strong breakdown of 387. I bought calls based on the idea that 387 broke out. When I saw that did not hold, buyers did not accept that level as a support zone, I cut loss and we move on. We reset. Maybe it'll take a couple seconds, maybe it'll take a few minutes, maybe it'll take a few hours, but we reset for the next trade setup. Okay, so I cut loss, started the day off red. I was not happy. However, we did have a false breakout setup of the 387 level. I did not catch this big drop at the 945 candle, but when it retested at the 10 o'clock candle, I did try puts. And when it dropped back down and hit the 385.5 support level, that's when I took profits. I played this level to level. I don't try to go for home run plays. Level to level, from one level to the next. On my second trade, I was already green. A small green, but you know, all the nervousness and all the anxiety you get from trading, I just took a break. I was just happy that I was green. From there, the market just chopped between the 387 level into the, I had a support at 384 with 385.5 as the middle level. Okay, we started chopping. So from there, I had to identify the chop range. The chop range I had, as mentioned, is 387 to 384. 384 is the 78.6 fib level from December low to February high. Okay, and of course 387 was the trend line. All right. So the idea when we get a range, a chop range like this, is as long as it's in the range, we want to scalp. We want to look for a scalp. So with 385.5 as the middle level, we want to watch that level and use it as a point of entry. When it breaks down, 385.5, you want to look for puts with 384 as a target. If it recaptures, you want to look for calls with 387 as a target. At least that's the idea here. I did not trade any of this. However, when it popped above 387, okay, when it popped above 387, I was not able to catch it. But it did give us that strong breakout That's the idea when you got a chop range. You want to see the breakout or the breakdown of the range. In this case, it broke out 387. Okay, now if I was quick enough, that is when I would have wanted to enter calls. Okay, which I missed the entry there. Okay, now I was able to catch some calls when it came down and tested 387. All right, well, it went down to 387.3. I wasn't trying to get a perfect entry. It was towards the end of the day, but I did catch an entry around 387.4-ish. And then I just took profits around 388.5. All right, wasn't much of a move, but it was a nice scalp move. All right, now, if there's something I want you guys to learn, all right, is notice how towards the end of the day that 387 level acted as support. All day, during the day, 387 acted as a strong sell zone. Then at the end of the day, it acted as a strong buy zone, which gave us that last minute rally at the end of the day. Okay, so that's just a concept that I want us to learn. When we see resistance turn into support, that is usually bullish. Okay, so we'll move on to the daily chart here. Okay, we once again closed above that yearly trend line. Remember, we closed below it last Friday and closed below it on Monday. This is our second day closing above it again. Now, I want to try to make this as simple as I can for us. All right, you guys know the market tends to phase between the trend phase and the chop phase. Okay, if you look to the left of your chart, you will see plenty of examples of chop phases, trend phases. Okay, chop phases, trend phases, chop phases, trend phases. I think you guys get it, right? The market cycles between the trend phase and the chop phase. Right now, it's very possible that we are in the chop phase. Now, if we look here, we have two tests of this 384 level. Okay, one right there. Second one right there. All right. Now, we did have this candle. The March 13 candle did go below 384, but keep in mind that day it gapped below 384 and recaptured it intraday. All right. Now, we also have two tests of this yellow trend line that I have here as resistant. Okay. 1 and 2. All right. I know this is not neat. Uncle Charles is not an artist. I am a chartist. But so yeah, we can clearly see that the market recognizes these levels. We're getting strong selling pressure from this yellow trend line, is also where the 200 daily moving average is. And we're getting strong buy pressure from that 384 level, which is the 78.6 fib level. In my opinion, that is our chop range. Based on the daily chart, we could get some more ranges in smaller time frame. But based on the daily chart, 384 to 393 is our chop range based on the daily chart. That's just my opinion, okay? We do have some levels between that range that we can use as pivot points for entries and exits. But as long as we are in that range, I think we are in the chop range and not in the trend. I think we are in the chop phase and not in the trend phase, if that makes sense, okay? The purpose of the chop phase is to build strength for the trend phase. All right, and once the trend phase loses strength, it goes back to the chop phase. All right, it cycles between each other. So as of right now, based on this context, 387 is a critical level. If we check the 15-minute chart, you can see the market clearly recognized this level as a pivot level, and it served today both as resistance and support. Okay. End of day yesterday in power hour, we had a strong bounce off this 387 level. End of day today, we had a strong bounce off this 387 level. All right. So as long as it holds, bulls have a chance of more upside. All right, I'll be watching 390 and 391.4. There's a gap around 391.4, and it's also the 61.8 fib level. If that clears, then watch the top of the range that I mentioned at 393 to 393.5 zone. We'll give it a zone. Okay, that's based on this yellow trend line that I have here, and also the 200 daily moving average. Above 393 to 393.5 zone, that's when I would swing calls and play it to the next targets. Okay, above 393, I have 395 to 396.5 with the 50 daily moving average at 399.4. I'm also watching the 400 level, so give it a zone. And the next critical fib level at 41.6. I have a level at 404 to 45 zone, and this orange trend line here is at 406.5. Above 406.5 would break this trend line, break out this trend line, this structure, and would be pretty bullish and put 408 in play, okay? But this bull case scenario can continue as long as 387 defends as support, and we gotta break some resistant levels, all right? Remember, the top of the chop range is 393 to 393.5 zone, all right? Now, that's the bull case scenario. The bear case scenario is breaking back below 387. All right, I have support at 385.5 and the critical 384 level. In my opinion, based on the context of this price action, that is the bottom of the range. All right, so if 384 can fail as support, that will be a big win for bulls, and I would favor a deeper sell-off. All right, we'll play it level to level at a time. 382, 380, 378, 376.5-ish, and 374.7 are targets. All right, targets that I'll be watching if 384 fails as support. Okay, bear case scenario starts with 387 failing, breaking back below this yearly trend line, and definitely breaking below that 78.6 fib level at 384. That will be a sign that the chop phase is over. Okay, guys. Now we move on to triple Q. Triple Q closed even higher than yesterday. All right, because SPY, despite this green candle, closed lower than it did yesterday. But triple Q closed higher than it did yesterday, giving us a second close above that 20 daily moving average. Now, the next critical level that I'm watching for tomorrow is 300. All right, 300 is based on this bluish trend line. I have it connecting from February 2nd, February 15th, and March 6th. Can triple Q break out of this trend line on the fourth test? All right, it'll have to break above 300 to 301 zone level for me to be bullish. Above 301, I'll favor 304, 306, 308.5 to 311. Okay, so the bull case continues above 300, 301 zone. For me to be bearish, though, it'll have to break back below the 20 daily moving average. The 20 daily moving average is at 296.2-ish. Break that down. That will put 293 in play. That's the 38.2 fib level. Below 293, I would swing puts for triple Q. All right? And that will put 290 and 286.7 in play. All right, below 286.7, I'll favor a test of 282.5-ish. IWM, it bounced off that 78.6 fib level at 170.3, okay? I have fib level from October low to February 2nd high. We got the bounce off that fib level today, but defense is not enough. I have resistance at 174.7 and 176.5. If IWM can recapture those levels, I would look to long with 178.2, 181 to 182 zone with 185 above in play. Okay? Now, if IWM wants to get more bearish, it needs to break down that 170.3 support. Break down that fib level to put 168, 165.7, and 162.5 back in play. Maybe we can test that low back in October. Tesla, It recaptured a critical level, a fib level, all right? The 23.6 fib level at 175.6. I have fib levels from all-time high down to January 2023 low. Today, it got a few cents of testing that level, the green line right there, as a support before finding buying pressure. All right, so if it wants to show follow through, when would I long? I would long if it can clear 184. Clear 184 to put 190.3 in the 20 daily moving average, which is at 193.7ish, in play. All right, above the 20 daily moving average, which would be bullish, and put 199 and fill the gap at 202.7ish. All right. Now, if it wants to get bearish, it has to break below 175.6. Break below that 23 point fib level. I have support at 173.4, 168.5, 164, and 160. Play it level to level and leave some runners. Apple, it's still basing just below that 50% fib level at 153.5. I can't get bullish until that level is cleared. We're still basing just below it. Not seeing strong selling pressure. If Apple is continuing to linger around there, it's not strong selling pressure. If it's strong selling pressure, it needs to push down and break down support, starting with 150, 147.5, and 146.6. All right? Look to short when support fails, starting with 150. All right, look to long above 153.5 to put 154.5 to 155 zone with 153.3 and 157.5 in play. All right, I'm sorry if I'm sounding repetitive, but look at this. We've got side-by-side candles here. Apple needs to do something. Give us some movement, Apple. All right, now let's take a look at these inverses. We had a false breakout setup yesterday on VIX, but it didn't show follow through and managed to close back above that 50% fib level at 26. Okay, that's bullish. So as long as it stays above 26, it needs to clear 28 and 31. Okay? If it wants to get bearish again, it needs to break down below 23.8, show some follow through. It broke below that level yesterday, but didn't show follow through. So we need to see follow through, and especially that 21.2 level. Clear that level, break down that level, that will be bearish, okay? Stay bullish as long as above 26. DXY recaptured that 23.6 fib level at 104.1. All right, that's a false breakdown setup. All right, that's usually a bullish setup. So as long as above 104.1, stay bullish. 105.2 is the next resistance level. It needs to clear, and maybe we can go see 106.5 and 107.7, okay? Now, let's end this with the option flow. I'm going to sign in here. We'll go to SPY, filter it for 500K premiums or above. And look at that, 75% into puts. Heading into towards the end of the week. All right, the one that does stand out is this put one right here. There's a sweep order, 3 million in premium, over 8,000 in size. Why does it stick out? Because it's sweeps, it's aggressive order types. You know, it's over 500,000 K in premium, which is 3 million, over 5,000 in size, which is 8,000. They entered around 384.3ish, 366 strike price for March 31st. That's a very bearish play on the SPY there. Triple Q, 79% for puts. All right, and look at this one. This is pretty aggressive. Sweep order over 900K in premium, 15,000 in size with puts, 284 strike price for March 17th. All right, IWM, 83% into puts. The one with big size here, they're block orders. Seeing a bunch of block orders, not the most aggressive plays. But they look like in the money puts. 195 strike price, but they're puts. 200 strike price, but they're puts for March 17th. Okay. Tesla, 90% into puts. Seeing big money. Block orders though, but big money. Millions and millions of dollars going into puts. All right. Big move coming soon. Not sure if it's up or down, but big move coming soon. 92% in the puts, very similar to SPY. I'm not SPY, Tesla, where Apple's getting these big money in the money puts. 190 strike price, 180 strike price for puts. Block orders. Okay? So keep that in mind. Usually when I see the order flow act like this, show data like this, there's a big move incoming. And let's end this with VIX, 58% in the calls. They're all split orders. But that's what it's showing, guys. A lot of big money betting to the upside on the VIX. All right, I hope you guys found value in this. Uncle Charter's Discord has tiers now. It's cheaper, it's more cheaper than ever to join my Discord. So if you want more content, definitely check out the links in the pinned comment below. Other than that, thank you guys so much for watching. Peace.